guys, are we live? Can we hear us? I am live. Okay, amazing. Okay, look, it does look bad out there. If you're looking at Twitter, it sounds bad out there. You're seeing headlines about China and Taiwan. You're seeing headlines about the strong dollar. You're seeing headlines about Europe. But I'm going to show you one thing that may be a huge bullish sign. In fact, the last time Bitcoin did this, Bitcoin went up 313% and more. And it just happened again, or it's about to happen again. So there is some light at the end of this tunnel. And today in the show, we're going to look at the light at the end of the tunnel. So sorry about the delay. We wanted to start on time, but with like connectivity issues. So here I am on broadcasting from my mobile phone, bring you crypto love and crypto wisdom. But we're here, and that's all they come. We are the definition of resilience. Not only in the market are we the definition of resilience, but even when the sound doesn't work and the internet doesn't work, we make a plan, and here we are bringing you crypto love and crypto wisdom, because nothing is going to stop us. Not a bear market, not internet going down, not power cuts. We're going to Am I off the stream? I'm back. Okay. 96% of our community are subscribed to our channel. So if you're not subscribed, what are you doing? What are you doing? Subscribe to our channel. We're also going to be doing an update on the BYBIT Trading competition. We're going to discuss what I should be doing. I am moving slightly up. Where am I? I'm number 348. I am moving slightly up. I was much worse yesterday, but I've got one unbelievable trade in play now. So let's talk about that unbelievable trade in play. What else? I'm going to show you a bullish indicator in all this negativity and bearishness. I'm going to show you one indicator that's actually super, super, super bullish. It's actually a bearish indicator, which is super bullish. Yeah, that's exactly what it is. It's a bearish indicator, which is super bullish. So should we do this? Carl, where are you in the trading competition just before we start?
I think I'm about 500-600.
500-600. Eh? But I thought you were setting up a trade.
I have but it hasn't triggered.
I'm still gonna win. I'm gonna win. I've got a good trade in play now. That's what I've got in play now. Cool. Let's do this. Smash that like button, obliterate it. We were late, so a lot of people dropped off the stream. Tell them we're back. Let's look at some good news in the mix. Well, let's look at some news in the mix. And there is some good news in all of this bad news. So a couple of things that I've seen which are quite positive. The first thing is that Bitcoin is holding this level quite well. So remember we said that if Bitcoin mustn't break this 20,800 level, it's doing quite well to hold it, especially if you go like onto the hourly chart and you look at how many times this level has actually been tested. It's been tested many times. In fact, let's go to a 4-hour chart, just makes it a bit easier. But you can see it's been tested a few times, and every single time Bitcoin recovers. So it looks like this is a huge support level, a huge support level. And I don't know if you guys were watching the NASDAQ, but every time that the NASDAQ now down 51 or 52 points or whatever it is. But yesterday when this NASDAQ was ripping down, Bitcoin actually wasn't going below the 20,700 level. And what we've been seeing in the last couple of dips from the NASDAQ is that Bitcoin kind of reacts first. And only after Bitcoin reacts, then the S&P starts to react. So it's almost like Bitcoin is a leading indicator, and then the S&P follows. It's not the first time I've seen it. I've been seeing that trend since November, actually, when Bitcoin started coming down first, then the NASDAQ started coming down, and every other big dip, we're seeing Bitcoin coming down first, then we're seeing the NASDAQ coming down. So that's where we're at. The NASDAQ now looks like it's looking for direction. Market is opening now. Market is opening literally in the next minute. Looks like the NASDAQ's looking for direction. Yesterday, we had a brutal day. The day before, we had a brutal day. You can see those two big red candles. We're now on the NASDAQ we are down 6-7%, but from the lows, in fact, let's not even look at the lows. Let's just take the last month. So there we go. Let's just take it from the 22nd, which is over here, and let's go up to where we are today. We're still up 8% in the last month on the NASDAQ, and that's pretty much what's happening. As I said, NASDAQ looking for its direction. But the chart that we spoke about yesterday, and the chart that is actually like the new narrative out there, it's not the new narrative, but it is a narrative which is actually driving the market. And I showed you yesterday that this was the only chart that is actually driving the market now. So the old narrative was interest rates and inflation. That narrative has now moved on, and that narrative has now moved on to one chart, which is this dollar index chart. And this dollar index chart actually closed at or just above the recent high. And this high that we haven't seen since I think it was 2002, the last time that we actually saw the dollar this strong. Let's quickly just go back and have a look. I think the last time we saw the dollar this strong was 2002. So it was over here, which was September 2002. That's the last time we saw the dollar index that high. And this is the narrative now. This is what the markets are looking at. And they're looking at this strong dollar, and everyone's starting to panic because of the strong dollar. And we'll talk about what that actually means, why this strong dollar is actually not good. Because people will say, well, strong dollar means it means good things. It means if you're holding dollars, your dollars are getting stronger. The thing is, it is making everything much more expensive. So stocks are becoming much more expensive. Bitcoin is becoming much more expensive. Not much more expensive, much cheaper relative to the dollar. So you've got stocks becoming cheaper relative to the dollar. You got Bitcoin becoming cheaper relative to the dollar. You got the pound getting destroyed against the dollar. You got the euro. Let's look at the euro. So remember the first time that the euro hit parity over here, and then we had a whole lot of short squeeze over there. Now you've got it breaking down again, and this time it looks a little bit more convincing. In fact, I think I saw a better chart of that. So the last time that we had parity, or that we had the euro break down below parity, was actually in the dot-com bubble. And ever since then, the euro has been stronger than the dollar. And now, well, you can see that the dollar is actually stronger than the euro for the first time in a long time. What that means is that it means that the US is not exporting anymore, because exports are becoming too expensive. And it's now going to start importing much more than it's exporting, which is not good. The other thing that's not good about this is that most countries have got their debt denominated in dollars. So you think about like emerging markets, or you think about even countries in the Eurozone, they've got debt, and their debt could be denominated in dollars, or is denominated primarily in dollars. And if you've got debt primarily denominated in dollars and the dollar gets stronger, it means that you have to work much harder to repay your debt. And effectively what this means is that countries won't be able to repay their debt. Someone just said in the comments in South Africa, 17 Rand to $1. So we know what that's like. And that causes ridiculous inflation. So what we're getting into a situation now is where there's ridiculous inflation in the Eurozone. I think I saw a tweet about inflation in the Eurozone. I've got to find this tweet for you guys. Actually, it wasn't a tweet. It was an article. I think it was an article. Yeah. So you're talking, Citi projects that UK inflation will breach 18% in January 2023. Which is, that's huge. And that's because A, you've got a strengthening dollar, but B, you've got skyrocketing food and energy prices in the Eurozone because of the Russia-Ukraine war. So another thing which is happening right now is this. So if you look at the oil price, remember we had the oil price going down and bringing down inflation. And now, if you look very closely on this chart, in fact, maybe I can zoom in for you guys. Let's quickly zoom into the 1 hour. And you can see that there's been a little breakout of the oil downward trend that we've had. So you see that little breakout over there on the 1 hour. Let's see if it's actually broken out on the 4 hour as well. I think it has. Bang, there's the breakout on the 4 hour. And I think there's a little breakout on the daily. Now, this breaks the downward trend that oil has been on since about June. So, yeah. So you got this downward trend of oil, which has been bringing down inflation. And the reason why this is happening is because yesterday we got an announcement from OPEC. And OPEC have basically blasted the United States for manipulating the oil market. That's kind of what they're saying here. They're saying, look, we don't think that these declining oil prices are a real reflection of the oil prices. And they're not, because we know that what the USA is doing it's been depleting its oil reserves. That's what it's been doing. It's been depleting its oil reserves, strategic oil reserves, to bring down the prices before the elections, because you can't go into elections with high gas prices, because then people won't vote for the Democrats in the midterm elections. And so what Joe Biden did was he said, look, let's deplete the strategic oil reserves. And the Saudis are getting kind of upset about this. And they're going, well, look, we know what you guys are doing. You're manipulating the oil price. And what they're saying is that they're saying that they know how to deal with this volatility in markets. And what they will do is they will just simply cut production. So now you've got the Saudis kind of at, I don't want to say war with the United States, but throwing punches at the United States. You've got Russia throwing punches at the United States. And you've got China throwing punches at the United States. The USA is taking a lot of punches. And that's what's happening. And that's what's happening right now. And this is 2 months or 3 months away from a midterm election. So things not looking good. Things not looking good. There's a lot of bad news. It's all about bad news. It's a strong dollar. It's high inflation. It is a Eurozone, which is absolutely desecrated. I don't know if you guys have been following the Eurozone. Huge inflation. Okay, we said that. Citibank said that there's going to be they're forecasting 18% inflation in the UK for January. You've got German electricity or German power. Look at that. It's 7x since 2021. And that is because of what's happening in Russia and Ukraine. Look at that. That is the price of electricity in Germany. Imagine having to manufacture or to work with in Germany on the back of this. And at the same time, you got the Eurozone also going into recession. So lots of bad news. We saw the Belgian Prime Minister come out yesterday and say he is warning Europe faces up to 10 difficult winters. He's forecasting that this thing is going to last for a long time. So again, more bad news. But this week, we're having the big day this week is Friday. And the reason why Friday is such a big day is because we're getting the PCE inflation numbers. And remember, the Fed are actually looking at PCE more than they're looking at CPI inflation. The PCE is the consumer expenditure inflation, and the CPI is the consumer price index. So the CPE takes out energy and food out of the equation. And when you take out energy and food out of the equation, well, has inflation really gone down? Well, that's what we're going to find out on Friday. We want this chart over here to have topped, which means that what we want is we want 6.8 to be the top. Okay, so Friday, which is one day before my birthday. Remember that, Kyle? Remember that, James? Friday is one day before my birthday. Please remember that. Please remember. So 1 day before that, we're having the PCE. And when this comes out, a couple of hours later, Powell is coming out to speak. And that's after a meeting that the Fed have been in a place called Jackson Hole. Now, interestingly, in the build-up to this Jackson Hole symposium or whatever the Fed are meeting at the moment, you've got shorts coming down. You've got shorts coming up. So we're now becoming net short. So it looks like people are going short or selling the market ahead of what's about to happen. And the other interesting thing that I saw was that, remember that for a long time, there was a 50% chance of a 50 basis point rate hike and a 50% chance of a 75% basis point rate hike. Well, now it's back to more leaning towards 75 basis points. And that's what I said. I think that what the Fed is going to do is the Fed are going to hit us with one more 75 basis point rate hike before everything happens, before the shit hits the fan. And so that's why I've been calling this for a while. It now looks like the market's starting to agree with me. But actually, what we need to look at is what happens on Friday. The PCE comes out. When the PCE comes out, that's when this will start to determine which way these inflation numbers are really going to go. What else? I think there's a couple of other things that we need to look at on the macro point of view. The first thing is that people are now starting to remove the probability of rate hikes in 2023. So now people are getting a little bit more bearish and they're removing the probability of rate hikes in 2023. So we must keep an eye on this chart to see what people are forecasting. Right now, we thought that the Fed were going to reduce rates in 2023, but the market is coming more into reality at the moment. So that's another thing that we need to look at. Taiwan and China, frictions in Taiwan and China again. Taiwan going into a recession, their housing market in a huge collapse, and the government there going in and trying to bail out all the reeling housing sector. So again, more bad news, and it just feels like there's bad news everywhere that we look. Bad news. But what do we do when there's bad news all around us? What do we do when everybody's calling for a low? What do we do when it feels like there's no catalyst that can get this market out of this mess? What do we do? What do we do when there's so much bad news in the market, and when we can't see the light, and when people are posting charts like this where they're overlaying the current market with the 2008 market, and they're saying it looks exactly like 2008, and if that's the case, then we've got a long way down to go, because in 2008 the market still went down from here, went down another 50%. What do we do when this happens? You got to do the opposite of what people are doing. You got to do the opposite of what people are doing, which is why I think we may get some kind of bounce. It feels to me like everyone's too bearish. And the thing is, what they're doing is they're posting the data that makes sense. So here we go again. Another one of these charts, 1937 versus 2000 versus 2008 versus 2022. And it's showing how what the market's doing, implying that we've got another 50% to go down. But the thing is, and I saw this with Wi-Fi Alpha this morning, and you can overlay the chart over different time zones to make it feel like you'll always find another chart to back up your data. And you can see, it says, look, the same chart. For the bulls, compare it to 1962 and to 2015. For the bears, compare it to 2008 and compare it to 1973. What I'm trying to show you is that you got to be careful of the data that you're looking at, because sometimes the data that you're looking at is selected to suit a narrative. And that's what's pretty much going on. And I'll show you that in a couple of times. So right now, there's a whole lot of people on Twitter with a whole lot of bad news. All the bad news, by the way, which is already out in the market. And they're posting these fractals, and they're showing you how we may be exactly like 2008. And they may be right. But this is not the data that I'd be looking at. I'd be looking at the more fundamental data, and remembering that every time that people are bearish, every time that people are this bearish, every time that we don't know how the market's going to recover, every time that we can't see the end of this and we're all bearish, that is when the market turns. And I'll remind you, when we were in COVID, when we were over here, when we were at the worst part of our, let me go into a much bigger time frame just to get us to where we need to get to. So when we were in COVID and we were over here, and we were going down, and I know it doesn't look very scary now, but when I do that, it starts to look a lot more scary. And we came all the way down to $3,780 on Bitcoin. We couldn't see the end. We thought this was the end of our lives. We thought we were all going to die in a pandemic. We thought the stores were going to remain closed forever. And look what happened after that. And it happens every single time. And so generally my buy signal is when everybody is so bearish all the time, and everybody's talking about all the obvious things that are out in the market. That's when I start to get interested. That's really when I start to get interested. So I'm interested now, and I'll show you a couple of other reasons why I'm interested. But I want to warn you that when you see these things, remember that these people are choosing charts to support their narrative. And what you can just do is just find other charts which support exactly the same narrative. If you're bored, if you've got the time and the energy to do this, then that's what you should be doing. I do want to show you that even in all this bad news, I want to show you one indicator that is actually positive. And I know we said on the tile, on the thumbnail, that every time that it's been flashing, it's flashed 313% in Bitcoin, but it's actually better than that. It's actually much better than that. And the indicator that I want to show you is an indicator. Let me call it up for you guys here. It's called a bearish crossover. Okay, so what the bearish crossover is when you take the 50-day moving average and you take the 50-week simple moving average and the 100-week simple moving average, and you see when they cross, and they call that a bearish crossover. So you can see it happened once in 2015 and once in February 2019, and it's happening again right now. And it's supposed to be a bearish indicator or a bearish sign. That's why it's called a bearish crossover. It's, again, when the crossover of the 50-week and the 100-week simple moving average cross. It's only happened 3 times. Once in April 2015, once in February 2019, and it's happening again right now. as we speak. It's crossing as we speak. And it's called a bearish crossover, and everybody believes that this is bearish. So what we decided to do was to actually go and do the homework and to find out what happened the last time that this happened. And what we found is we found a commonality amongst the last two times that's been happening, and it actually looks like it may happen again. The commonalities are as follows. The first thing is that the bottom had already been reached. There we go. The bottom had already been reached over there before the crossover. The bottom had already been reached over here before the crossover. You see, but in both cases, the bottom had been reached. And if you look at that scenario looks awfully similar to these two scenarios. In fact, if you look at this scenario over here, it looks very much like the lunar Celsius three arrows capital liquidations. The second thing that we noticed is that from the time that this 50-week moving average and crossed the 100-week moving average in this bearish divergence, well, the market then went on a rampage afterwards. So if you look at the market then, 4,682% from the time that it crossed on the next run up. And again over here, 1,019% from the time that it crossed until the next top. And we're just about to cross again. And yesterday I showed you another very similar chart, and I may have that chart for you guys here. It is the chart that I showed you. Let's have a look here. I may actually have it for you. Let me call up that chart for you guys. Here we go. I showed you another chart, which kind of backs exactly the same thesis. So if you look at this chart over here, this is the chart, the inverted yield curve. And you can see again that we're touching the bottom from an inverted yield curve point of view, because it's not often that the yield curve inverts like this. When you put these two pieces of data together, you say to yourself, hold on a second. This indicator, which has only happened twice before, has now crossed again. And when it's crossed again, the bottom had already happened. We did hover around the bottom for quite a while. We did have one last flush out, but never quite touched the lows. And if you look at the time periods here, kind of similar to where we're hovering right now, which means that we could be looking at a bottom what this article over here said is we could be looking at a bottom sometime in, from the previous two cycles, Bitcoin bottomed 59 and 53 weeks following its cycle top. Based on this, history suggests a bottom sometime around November 2022. But what you can see is that in both cases, we had hit the actual price bottom way before that. So that's one of the rays of light that we've got in this I want to call it a pretty dark market. I wanted to show you again how people make data look like they want it to look at. So I saw this chart over here, and it is actually quite a bullish chart. I'll show it to you. It is actually quite a bullish chart. What it shows is that the number of Ethereum addresses holding 1,000 plus Ethereum just hit a 10-month high. Okay, so great. It means that the whales are accumulating Ethereum ahead of the merge, right? So then I went and looked at that same chart again, and look how hard you have to look if you zoom out to see the same aggression that you see on the short-term timescale. So it is true. The number of 1,000 plus Ethereum addresses. So let's quickly go there and you can see it. So number of 1,000 plus Ethereum addresses increasing for the first time in a long time. Actually, if you zoom out, what you can see, let's try and zoom out and I'll show you something. So let's just quickly do that. And let me just show you that. These addresses actually predict the market pretty well. So what they do is they sell into the up markets and they buy into the down markets, and they're starting to accumulate again over here. You can see that they're starting to accumulate again over here. So again, another little bit of possibly good news in what everybody's trying to paint as a very, very, very bad market. Someone says, pull up a Dixie chart. Okay, the Dixie is coming down. It's coming down quite aggressively, which means that probably the NASDAQ is going to come up, which means that there's probably going to be a bounce. And that's what I wanted to do with you guys now, is I actually wanted to trade this bounce. So let's trade this bounce. I'm now 341 in the competition. I want to trade this bounce. These are the two that I'm trading here. So I'm going to open another long position on Rune because I'm positioning myself. I think we're about to get a bounce. I was hoping to, in fact, I'm going to do it right now. Let's quickly get in. I want to get into this position right now. And let me double my Rune position. Let me just add a little bit to my Rune position. I'm going on 10x. Okay, I'm going to. It's the only way. We don't have time. What happened? Did my trade not go through? I probably need to move some. Let me quickly move some. Let me move some assets across. I probably need some money in the derivatives account. Let's quickly move $2,000 from the derivatives account, from the spot account to the derivatives account. I wanted to trade this bounce, but I got to it too late. Okay, and I think now there should be money there. Let me go back to derivative. Let's go back here and let's quickly find Rune, which is a trade that I wanted to make because I think this one would bounce pretty well. And let me add 2,500 Rune and open a 10x long there. You can see that I've been opening very aggressive near and Rune longs today because I think we're going to get a bounce. I think these two are going to bounce pretty high into the session. So is there anything else that's worth looking at? Let's quickly have a look. Is there anything else worth trading right now? So I see the NASDAQ is up 37.5 points. Expected a little bit of a bounce from the NASDAQ. Closed my short, or most of my short last night. I still got one contract open. Near bouncing. Uniswap had a good bounce. Phantom had a good bounce. I think we could be positioned for a bounce. I'm positioning myself for a bounce. Cardano's already up. Render's already up. All right, I'll take another trade before we leave here. One we should be looking at is GMX or GMT. Sorry, GMX. Look at the price action on GMX, back up at $40 as if nothing ever happened. So it's back up actually at $41. Remember, we've been following this. We've been telling you to be going long GMX. We told you to go long at 30 and 31 and whatever. Now back at $40, even with a slight pullback. If you want to be buying NFTs, I think pay attention. Now is a good time to be paying attention. I do think that, or certainly I missed a good entry into most of the good NFTs. But what you're starting to see is you're starting to see capitulation in the NFT market, and you're starting to see the good tokens start rising up the top. We spoke yesterday about BendDAO. Remember we spoke about BendDAO and how BendDAO was about to get a whole lot of liquidations. Well, let's take a quick pulse check of the NFT market. So you got CryptoPunks that were trading at $440,000, now trading at $108,000. You got Bored Apes, which were trading at $435,000, now trading at $100,000. You got Mutant Apes at $130,000, now trading at $19,000. So what you can see is that there is a capitulation and a breakdown in the NFT market. And I looked at this chart of Bored Apes. This is the floor price of Bored Apes. Have a look at that. It's really come down. It's now trading at $91,000. And I think there's a capitulation happening here. So you got to keep your eyes on, if you want to get into NFTs, keep your eyes on what's going on here. Let's see what happens with this bend down. Someone said bend down liquidation. What you can see is that the health of this ecosystem is not very good. So right now, to borrow Ethereum against your NFTs, you need to pay 77% per year to borrow against your NFTs. So the health here is not very good. It looks like there's going to be a breakdown. We got to be here when there's a breakdown. But at the same time, one NFT collection actually has jumped, which is Fred's Pudgy Penguins. But I think he sold, didn't he sell?
It's probably a forever on that.
No, I think he sold. I think Fred sold his penguins. I think Fred actually sold his penguins. I think Fred sold them. Alrighty. So yeah, keep your eyes on the prize. If you want some NFTs, there might be a good opportunity to be getting yourself some NFTs. What else? What else is there today? Let's look and see if there is anything else. Near, we had a spike in transactions yesterday. I don't know why, but there is NearCon coming up. This is actually why I'm focusing so much on Near, because I think that with the conference coming up in about 3 weeks. With the conference coming up in about 3 weeks, you got to go into the conference long Near and then sell on the news of the conference. You got to. Bad news for Harmony One, which was the chain that hosted DeFi Kingdoms. Well, DeFi Kingdoms now leaving Harmony One and going to Clayton, which is the Korean blockchain, which I mentioned in my Korea video the other day. So yeah, that's another one. This Ethereum debacle continues around slashing, big validators if they comply with OFAC and if they don't keep the integrity of the decentralized chain. And it's making people really wake up to the issues around proof of stake and the centralization of the validators. It's a big issue because I think we said last time, and I think, let me try and find that chart for you. I should have a chart for you over here. Let me quickly find that chart for you. Hold on a second. I had a chart which showed where all the staking nodes. Here we go. So this is a chart that shows you who the primary stakers are on the ETH beacon chain. And if you look at where the primary stakes are, it's Lido, and then you've got Coinbase and you've got Kraken. So if you look at Coinbase and Kraken control a big part of it, and they're US entities, and they're going to have to comply with any kind of sanctions that are imposed by OFAC. And so now Eric Wall has come out and he actually published a paper, and he said, you know, you've actually got to slash these validators. You've got to slash their stake if they don't comply with keeping the blockchain decentralized. And I mean, it kind of makes you think about where you want to stake your money, whether you should be staking it on a decentralized protocol like a Lido, or whether you want to be giving your tokens to a centralized exchange where you know that they may actually comply with OFAC sanctions. And if they do, well, their stake might actually be slashed. And if their stake might get slashed, then you may actually lose your money. I think that is it. I did see one more thing which I want to show you, which is the revenue that Web2 companies are making out of NFTs. Now, it's not huge, but it's good to see that they're starting to increase the amount of revenue that they're making. Like Nike's made a total of $185 million in NFT revenue. Dolce & Gabbana's made $25 million in NFT revenue. Tiffany 12.62, Gucci 11. Now, these are not huge numbers yet, but it's interesting and exciting to see how Web2 companies are actually starting to monetize and to build another revenue stream out of Web3, which is, I think, super encouraging, super encouraging. Tomorrow, we will 10x some BitGet portfolios. We haven't 10x some BitGet portfolios for a while, so tomorrow we'll 10x 2 BitGet portfolios. So if you're not signed up with BitGet, referral link below, sign up to BitGet. Also, if you want to join the trading competition, I mean, BitGet, we don't have much more time. You got about 10 days. You can still win in 10 days. You can still win in 10 days. People are saying fund BYBIT accounts. Cool, we'll fund some BYBIT accounts today. Don't worry, we'll do it today. Jimmy, was your BYBIT account funded? I sent you $500 this morning. It should be funded. All right, so if you want to sign up for the trading competition, here is a referral link in the description below. Click that. It'll take you to the BYBIT competition. Tomorrow, we will, there's 2,421 of us. When we get to 2,500, we all actually increase. The prize money actually increases. You see that? So we need to get here. So there's 2,421 of us. So do that. Tomorrow, 10xing BitGet some BitGet portfolios. Let me try and let's find some accounts in the BYBIT. I need to find the spreadsheet. Let's just have a look here. Here we go. All right, so we're going to 10x, not 10x. We're just going to fund some people's accounts who are actually playing in the competition. All right, UIDs who have joined. My data is old. My data is from the 12th of August. That's not very good. Okay, today we'll fund accounts from the 10th of August, and then we'll fund some other accounts tomorrow which are newer. So today I'm going to fund these 10 accounts from 690 to 700. I'm going to fund you guys each with $250. Remember the rules. The rules are that you play on our account, but if you win, you got to give back the capital and you keep the profits. If you lose nothing. So I'm going to fund these 10 accounts with $250. Tomorrow I'll update the list. Tomorrow we'll update the list and we'll carry on. I guess that's it for today. Short show for today. We had some sound issues. We had some internet issues from my phone. I guess it worked. I hope it worked. I'll see you guys again tomorrow. Till then, have fun and trade well, my friends. How was the internet?
I saw that I missed most of the show.
You couldn't get it because you were on the internet.
Yeah.
It was good. It worked.
The show